Hello, everybody. This is take 7. We're having some crazy technical difficulties this morning. This is the Flow Show. I'm Sean McLaughlin. He's Steve Straza. Straza, how you doing over there?
I mean, outside of the tech support morning that I'm having, doing all right. Doing all right.
All right. Well, the Flow Show here is a fully improvised show where we go down the rabbit hole looking for some trade ideas to put on. We're going to improvise even a little more today because of the technical difficulties we're having. Unfortunately, I will not be able to share my screen, so we're only going to have Straz's screen, which is okay. He's got the better charts anyway. But hey, what we're going to do here is this show is meant to be a little bit of a glimpse behind the curtain of how me and Straza and the team put together trade ideas, particularly options trades at All Star Charts. And the way it works, at least for me, is after Straza and his team go through all the hard work of going through all the different charts. They look at hundreds and thousands of charts every day. They go through all the hard work to surface all the best ideas. And once they've done that, then I come in and look at the ideas that have active options markets, ideas that I might find interesting from an options trading perspective, and then put a trade on based on their research. And so that's what I do behind the scenes. And oftentimes I work with Straza to make these trades happen. We talk through them. We talk through different parameters, different things. And so this show is just meant to give you guys a glimpse of what we do every day here at All Star Charts. How did I do there, Straza? Did I explain our process at all?
You did great. The idea is that we're going to talk through a trade setup beginning to end. How it begins, how it ends, we don't know. And another thing I would like to add is we're going to do a better job of monitoring the chat. So talk to us, ask questions, watching the chat now. So hopefully we'll get some good questions, comments in there that we
all right. Hey, I love that free plug for Oanda there in the bottom left. That's cool. Go Oanda.
When I was just starting as an auditor, we used to use Oanda, I think it is, to get exchange rates. The data provider has been around forever.
Right on. All right, so Straza, you and I were chatting this morning. We put on a few weeks ago a very aggressive bullish bet in Uber, as the cool kids are calling it now. And did we have any clue that Uber would be added to the S&P 500? I mean, we talked about it internally, kind of kicking around the idea that it would make sense for it to be added to the S&P 500 someday. Did we think it was going to happen this weekend? And is that why we were in the trade? Absolutely not. But, and we talk about this all the time, Straza, surprise moves tend to happen in the direction of the underlying trend. So if you're trading with the underlying trend, you're better positioned to be involved when things like this happen, right?
All news, typically you'll see it with earnings reactions, right? But it's really any kind of stock moving headline tends to be in the direction of the underlying trend. And we're seeing that today, right? The massive move higher on the heels of this S&P 500 inclusion, which everybody really knew about. So I think kind of running into, and first of all, look at this chart. Remember when I marked this up, Sean, weeks ago?
Yep.
We talked about how it's a hard trade, and we talked about how the best breakouts and the best trends don't retest. So I marked it up for, okay, this would be the ideal situation, right? We come back here, we retest this nice little range, then we go, no retest. And you're at this point not getting one. If you're waiting around for a retest 10 points lower, train's left the station on this one. I think if you zoom out, throw up a weekly chart just to show it. I mean, we're there, right? This is, I think our target's technically 64, right? The actual highs, daily highs from 2021, but we're now in this overhead supply zone in the 60s, where I think you probably stop seeing a straight line higher kind of advance from Uber and you start to see some more normal action, some digestion of these gains, right? A little absorption of that overhead supply before we keep going. So not a bad place to feed the ducks. I did that this morning with some of my
I was
calls.
just going to say, you fed the ducks this morning. You did what is often a smart move. You're selling the news. I don't hate that. I am also positioned. I'm in the March 60 calls. I'm sticking with it a little bit longer. I'm holding out for the $64 price target. That was the original plan when we got into the trade. Maybe I'll live to regret it. I don't know, but I'm just trying to stick to my plan and be as mechanical as I can. And so I'm holding for 64. We got till March to get there. I feel like the market has tipped its hand here. The path of least resistance is higher, even though it is still technically a pain trade. It's even more painful now for the Bears. The Bears are screaming right now.
Yeah, I mean, and a lot of these charts are tough. Like we talked about this too, how Uber was one that's been moving higher. You see this? This is the weekly 1, 2, 3, 4, 5 straight up weeks, working on 6 straight up week. If we kind of contrast that with what most stocks were doing, this was right around here, November 14th, right? So while Uber just kept grinding steadily higher in this little channel, most stocks at the beginning of this channel actually started going sideways. November 14th is when internals peaked last month. We actually got a big spike in new highs Friday, but before Friday, it was that November 14th candle that really marked like an interim high for the overall market. You could see that right here in the Russell 2000. Remove some of these markups so you could see it clear. So again, November 14th, really tight coil, right? And we were asking ourselves this question last week. Okay, if most stocks have been correcting for the past 2 weeks, what if they resolve higher? What are the best stocks going to be doing? And Uber, a great example of what the best stocks are doing here today, up 5%, as we're getting this resolution higher from a lot of these coils in most stocks.
Yeah. And a similar chart, but for very different reasons. Coin. Holy cow. That thing is continuing to rip. We're getting rewarded for putting on those hard trade Straza, which is kind of a terrible segue to what I wanted to say next, is that over the last 2-3 weeks, I've been really hard up about wanting to do the hard trades because I felt like the hard trades were the ones that were going to pay. And Coin and Uber are perfect examples of that. We have a few others. IBM is another one that looked like a hard trade and it's working. I still, Straza, I still feel like I want to do the hard trades, although I'm less aggressive minded on the hard trades right now.
Yeah, I'm totally with you. A lot of these best stocks, leadership stocks, I mean, look, they were extended 2 weeks ago. Now a lot of them are just super extended. One way I like to analyze, how extended or extreme of a move something has been is by measuring the distance from the 200-day moving average, right? So you brought up Coinbase. I mean, look, have we been more extended like in July? Maybe a little bit, but 80% away from the long-term mean, you're probably not getting an optimal entry 80% above the long-term moving average, right?
Yeah.
And there's just a lot of names like that right now. So Coin's another one. Out of calls for now, in the common. I think it goes higher, but these things deserve some digestion.
Right. So that brings me to my next point, or my next question is, do you have any charts that the stocks are just now starting to break out of a key resistance level? Do you have anything like that? I'm not really interested in chasing anything right now, but if you got something that's a fresh break, I'm interested.
So I thought we would look at new stocks today. I will bring an old base, one that we've been stalking for a while. I think you got long the net last week.
I did, yeah.
This one's similar, right? A lot of these charts, we keep going back to the same chart patterns because they keep working, right? And we've been banging the table on buying these reversals or buying these, textbook basing patterns as they complete, right? Not trying to run something that's already hit 2 targets and booked a reversal pattern 2 quarters ago.
Hey, do I need to call the chart police on this not very horizontal blue line you got there on that chart? Do I need to call the chart police on that one?
How's that?
All right, it's a little better.
Oh gosh, what are we doing here? Sorry.
Uh-oh. Technical difficulties, they just keep coming. They come in waves.
Oh man, my computer's struggling today.
Uh,
I don't
well,
know.
while you figure that out, I'm going to do a trade here real quick. Boom, 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 boom. Yeah, this is great. See, everybody. This is how the sausage is made here at All Star Charts, and that includes technical difficulties. Technical difficulties is how the sausage is made here.
Oh man, what a day! All right, better. So look, we like net, we like Datadog. I think this is low hanging fruit, right? This is an obvious one. These are the patterns we've been buying. These are the patterns that have been working for us all day. But I think like what I'm trying to do and think of personally right now for my portfolio is own a lot of these leaders, own a lot of these stocks that have been working all year, been working better than everything else. I know that if this is going to be a sustainable market, you will get a broadening in participation, right? You're going to see.
I like the look of that chart right there. That's a good looking chart. That T-Mobile.
T-Mobile looks great. That's one. Another one, like look at what transports have done since Friday. Just the last two candles in Dow Transports. This was one that I really like. United Rentals, fresh breakout, a little bit different than those growth stock, rounding bottom reversals that we've been buying. This one's pushing up to new all-time highs. Also, you can see in the lower pane here, outperforming. And then one more, and we'll go back to whatever tickles your fancy the most. Oh, Merck is another one. But here we go. Right here. I like the banks. Interested in banks. I have no exposure to financials.
Neither do I.
I'm trying to change that. The way these stocks got hit, there's gaps all over these charts. And this one really stuck out. This is Key Corp, right? Because you do have some, a decent reversal in place here. You can see the rounding bottom here with the green arc. However, what I like more about this is look at, during the COVID crash in March of 2020, we gapped right through this level 13 to 15-ish. Then after the COVID bottom is formed, we gap back out through it. Now we print a massive multi-year top. And during the regional bank crisis in March of this year, we gap back through this 15, 13-ish level. Again, we're back there right now with like a 7-month base. No, I'm sorry, 8-9 month base in place here. It's not the biggest trade, right? We're looking at maybe 20%, 13, call it 1550. But when this stock enters this volume pocket and has done so several times over the past several years, tends to move very swiftly. So I think there might be a short-term trading opportunity in some of these banks. I really like Key Corp.
Well, okay. You said the keyword short term.
Very short term.
And here's another thing that's going to be a little fly in the ointment, but I'm actually willing to take the bet that it's going to help us. Is there is earnings coming up on January 18th.
Okay.
And there's options expiring on January 19th. I like that. The day after earnings.
Okay.
It could be a tasty little trade here. The January 19, 15 strike calls, you could buy them right now for 25 cents, Straza. And if we get a pop coming out of earnings, going through this volume pocket,
absolutely,
that could be a nice little kicker right there.
So you craft that one, just long calls. Don't need to sell anything against it.
Actually,
right?
hold on. Let me roll that back a little second. I got ahead of myself there, Straza. And I got ahead of myself because the top of that green zone you're looking at right there is right about 15, right?
Yeah.
So even if earnings drives the stock right up to about 15, well, those 15 strike calls actually may not pay because they expire the day after.
Yeah, okay. So if you don't get the move until
it would have to be, we'd have to get a move up to like 17, 18, 19 to really make those calls pay.
Sean, you'll see stocks like this. This is a regional bank. As the others start trickling out their earnings and regional start beating, you start to see these sympathy moves.
Yeah. Okay, look, I still like this trade, but I'm changing my mind on the short term. I know you mentioned short term, but if I look at the June options, same strike 15.
Yeah.
We could buy those for 85 cents, and that gives us a chance for that thing to really follow through on an earnings gap. And for us to be, even if it gaps to 15, following earnings, we'll still have 6 months to expiration in those June 15 calls. So they'll be winning, I don't know how much, no one knows, but could be at least sitting on a double at that point with 6 months to go or 5 months to go.
That's probably a better way to do it.
Yeah. Yeah. All right. June 15 calls in KeyBank. You can buy them for 85 cents right now. I kind of like it. I'm twiddling my fingers over here. You can't see it, but this is what I do when I like an idea. I'm like, ooh, I like this.
And it's kind of like in the middle, right, of what we're trying to do versus not trying to do. We talk about the best stocks that already booked reversals and are hitting price targets, and the worst stocks that are coming off range lows look something like this, Match.com, right? This was one from the Follow the Flow list. This one's kind of just right in the middle, right? It's got a reversal in place, shaping up, not as big as some of these 18-month rounding bottoms, right, that started forming last year in these growthier names, but a big enough reversal. You see the 200-day, we're back above it finally after a long time below it. This one is really shaping up to enter a new uptrend. Might need time, which I kind of like going out to June for that reason, but it's not this, right? It's a lot better than this. So I do like it. I also think if you've made money in these growth stocks, if you've made money in these leaders, it's only prudent to kind of maybe spread that out into different areas now, because we got to be getting some sort of big rotation here. And we're already seeing those rotational tails.
And this is a different type of trade buying a KeyBank than a lot of the other hard trades we have on. I wouldn't classify this as a hard trade, but it doesn't mean it can't work. And it does feel like a nice portfolio diversifier for what I've got on now.
Listen, we've been patient with the banks, right? Hated them earlier in the year. Said, okay, there might be something there with interest rates coming down now, seem to have peaked, at least for this cycle. I think the banks are becoming a very, very attractive group. A lot of them are selling like near book value, which historically, you go back decades when the banks trade for net book, that's typically a really good time to dip your toes in. So even the fundamental people can find something to like here.
I don't think I've traded any bank stocks since I got torched in the Silicon Valley thing last year, or earlier this year, excuse me.
I was in Silvergate when it blew up.
I was short puts in KRE and XLF during that, and that was no fun.
Yeah, sometimes we were involved in Silvergate because of the high short interest. But the thing about a high short interest is a lot of the times that they get it right. And when a name has a 60, 70, 80% short interest, whatever it was.
Yeah, we've talked about that in the past. A lot of times when a stock has a big short interest, there's a very good reason for that. It's not, they're not idiots. The people that aggressively get short, that's the smart money, right? But we like high short interest because when the smart money changes their mind, they got that's fuel for the fire to cover to cover and send the stock higher. So when a stock doesn't do what the shorts think it's going to do, look, just because they're smart money doesn't mean they're always right? They're just like you and I. They make mistakes. They're wrong. And when they're wrong, those stocks tend to rip higher due to that embedded, that they have to buy. That's the only way they could stop the pain.
You're seeing them run these names, just out here since last week. Like one that keeps coming up on my radar is Carvana. Big candle Friday and Gulf weeks of activity.
What's your latest boots on the ground report on Carvana? I know you've been keeping us up to date on that Miami Turnpike.
So I thought about it. We were driving through just last week. Yeah, I missed the show Monday of last week because we were in Miami. There's still about 25% full, but the trend is up. The trend is back to putting more cars in the Carvana Tower. So we'll see. That's been a great indicator for us. It's been a great indicator. Sean, you got to take this one from the chat. This is a great question. Okay. Carvana this summer was a perfect example. Yeah, it was. The sales price, I think you're asking for the price target on Datadog is, where is this guy? Let's find it. Let's target this thing out. Boom. Back to the old highs. I think it's at this point in the bull market, it's a little bit too cute. Sure. Can I add the 62% here and give you the next fib retracement? It comes in at 147.50. I think you're selling yourself short at this point to not want those old highs from these reversal patterns, we continue to see stock after stock after stock, book reversal, head back to those old highs. So that's really what I would want for Datadog, called 200. But the question I want you to take, Sean, do you leg in and out of trades? You hit a target early, are you completely out? I got something to say about this.
That is a very good question, and I've been changing my attitude about that recently. So this is very topical. So from the very beginning, when we started All Star Options, which is what are we into now? Our 6th year with All Star Options. I've lost track. It's been a long time. My best practice when I was buying, and I'm just talking long calls here. It's different strategies have different things, but for a simple long call trade, let's keep this simple. My best practice had always been, and this has served me well throughout my trading career. My best practice had been to sell half of my position when I doubled, like when the calls doubled in value. So if I bought them for $2 and they traded up to $4, I would sell half of them and take all of my risk capital out, and then ride as far as I can with the half position. Nothing wrong with that. I still don't hate that. I've changed my attitude a little bit in recent months. I'm just kind of been going through the postmortems of some of my older trades, some of my older winners, some of my just all the trades. And I've noticed that I shouldn't say more often than not, but on a few very glaring occasions, I left a lot of profit on the table by selling half of my position and then only holding the other half. And so what I've changed, and the jury's still out whether this is a good long-term change for me. But now I've been trying to hold these positions until we get to a meaningful price target. Like selling at a double is just an arbitrary, there's no reason. There's no technical reason to sell a double, only other than I doubled my investment. But the chart's not telling me to sell. And so now I'm thinking what I'm doing now is I'm looking for significant levels of resistance or potential resistance in which to sell. And Steve and the team do a great job of laying out potential price targets for pretty much every trade that All Star Charts recommends. And so I'm using those levels now as my first target. And when I get there, instead of selling half of my position, by then, if we get to that price target, if it's a long call, I'm probably, and every trade's different, but for argument's sake, we get there, we're at least a 4x or a 5x at that point. And what I'm doing now, instead of selling half of my position, I'm just selling as much of my position as I need to get my original risk capital back at that point. And that might only require me to sell 20% of my position, right? Like if I bought 10 contracts, I might only have to sell 2 of them, got paid back my original risk capital, and I still have the majority of the position for the big move. And that's the change I've made a little bit. I don't know if that answers your question. I don't leg into trades, but that's kind of how I think about legging out of them.
I love it. I think it's great advice. Basically, what you're doing is you're trying to get yourself back to a position where you're safe if the trades turn against you, right? So the worst you could do is breaking even after you sell whatever it takes to sell to do that. And now, instead of just arbitrarily, selling the double, closing half, you're leaving a larger position to let it ride. And what it's doing is what do they call that? Fat tails, right? There's like a statistical thing for this where you're leaving more of a chance for that outsized move to happen and then to be more significant or more meaningful to your trading account.
Right. Look, the con on this, there's pros and cons, right? The con on doing this is that I'm going to increase my losing rate, right? I'm going to lose more often doing this. However, when I win, I'm going to win a lot bigger. And that math tends to work in our favor over the long run. Not on every trade, but over the long run, you need those big wins because every year when I look through my data, when I look at everything, every trade I've done, I look at my profits and look at my losses. I find that out of all the trades I do, and I do hundreds of trades every year, it's like it's 5 or 10 trades out of hundreds of trades that are responsible for any profit that I have, and all the rest are just a wash, right? Small losers, small winners, they kind of net themselves out. That's like 80% of my trades, 90% of my trades. And 5 to 10% of them are where all my profits came from. And by doing this, by allowing some of those bigger profits to run even more, I think that'll improve my numbers, or at least my bottom line.
you're increasing the likelihood of one of these fat tail events.
You need the fat tail. Yeah.
So I do the same thing. I'll just say, typically trading shorter term options, I'm almost always legging out. Like if it was a winning trade, I've pretty much always sold more than once. I'll do something similar to what Sean's talking about. Take some of the position off right away. Hopefully be right away. Take some of the position off, let the rest ride. And sometimes I will leg into. If I like something, I'll buy it multiple times. Often, rather than hitting the same contract, though, I'll spread the love a little bit. Right? I'll hit different expirations, different strikes, and then manage it.
So you and I are different in the fact that it sounds like I'm a little bit more mechanical about how I do it, and you're going with the gut feel. And not that that's a bad thing. That's totally. You've earned a good gut. Yep. You've been doing this for a long time.
Relying on technicals, right? If something like DraftKings right now, I'm seeing that momentum start to roll and watching it real close, right? Because I don't want to give money back. New multi-week lows and I'll be out of something like that. Palantir rolled over on me. I didn't even get a chance to sell a double, so that one's going to go to zero. Coinbase, a little bit different, or Uber in this case. It ran. I told you I was worried about it last week. I was like, I don't want to give any back on this. Today, pretty much out of all of it. Yep. It does depend. It depends on the technicals, really.
All right, look, we're starting to run long, and we got a late start due to our technical difficulties. So let's start wrapping this up. We didn't really get into Datadog, a trade. I do like this. I'll just quickly mention, and for those of you who want to do the work, the implied volatility in Datadog is very cheap right now. So this is a good situation if you're bullish to buy long calls in. I haven't thought about this too much, but I'm looking at like the July 150s. Right now, you can buy them for about 650. And if we run the 200, those are going to pay very, very well. But for me, I think the big takeaway from today's talk is I like that key bank. I'm going back to that key. Those June 15 calls for under $1, 80 cents, I think is what I looked at. I like that trade. That's the one I like the most right now.
I'm with you, Sean. I like this one too. These volume pockets, we see these things work over and over and over and over again. So I look for something like this. This one's been gapping in the same spot. And now, like you said, we got earnings coming up. Maybe that's the catalyst. You go out to the summer, you give it some time. I think the reversal is just about in. And this is one of those groups that we should all be looking to catch some rotation, especially into the new year.
Right. Well, hey, everybody, I know there were a few people hitting me up privately on chat and on YouTube. Some of you were waiting for us. Sorry for the delay, but thanks for being patient. I hope this was worth your time. We'll do this again. Actually, no, Straza, we're not going to do this next week. I'm going to be traveling. Monday's a travel day for me next week. I'm going to Kansas City for the Bills-Kansas City game next Sunday. This coming Sunday.
Awesome, man. Good for you. That's going to be a blast.
Yeah, and I'll be traveling back on Monday morning, so we will not be able to do this. Maybe we'll do it later in the week. We'll see. But either way, thanks for tuning in. This has been the Flow Show. He's Steve Straza. I'm Sean McLaughlin. Have a great trading day. We'll talk again. We'll see you on the morning show tomorrow morning.
Thanks for joining, everybody.